If you're somebody who owes the IRS over $50,000 and you think, I'll just call the IRS and tell them what I can afford and I'll get into that kind of payment plan, you may be in for quite a surprise. Because once tax debt gets larger than $50,000, the IRS approval process changes and they usually won't simply accept whatever payment amount you want. Hi, I'm Bob Jablonsky. I'm an enrolled agent and certified tax resolution specialist. I help taxpayers across the country deal with IRS problems, and today I want to explain to you how IRS payment plans are approved when you owe over $50,000. First, many taxpayers are surprised to learn that the IRS will want full financial disclosure once the debt gets larger. This may even be the case when you owe smaller amounts. Here's the thing, when you owe less than 10,000, there's something called a guaranteed installment agreement as long as you fit into the criteria. And when you owe $50,000 or less, there's something the IRS has created called the simple installment agreement. And that simple plan, as long as you can fully pay the IRS for that tax debt within their statute of limitations to collect, the IRS is generally going to set up a payment plan for you. And with that payment plan, they won't be levying you or they won't be filing a federal tax lien. If you're unable to do that, you may find yourself in a similar situation here. What we're talking about here is with these amounts that are over $50,000, the IRS is going to want in many cases that financial disclosure, and it comes on a collection information statement, which are known as 433Fs. If you are communicating to the ACS, which is when you are calling the 800 number, a 433A if you're dealing with an individual tax issue with a revenue officer, or if it's a business issue, a 433B. And so depending on your situation, it could be one of those forms. Like for example, a 433F has a lot less detail than a 433A. So the form matters. However, no matter which form you're completing, the IRS is asking to review things like, what is your monthly cash flow? What's your income? What are your expenses? Your living expenses for housing, for groceries and household, for your vehicle expenses, and so on. They're going to want all of that information on your monthly cash flow. In addition, they're going to want information on your assets to determine your equity in your assets, including your bank accounts, retirement accounts, and other investment accounts. Maybe equity in real estate. Do you own a home? Or do you own rental real estate? They might want all of that. And what they're looking for is a combination of what assets do you have available to pay the government for that tax debt, as well as what is your monthly available cash flow to make payments to them. Taxpayers often get frustrated when they're sending this in. If you actually look at the forms, you'll notice there is an actual amount of expense, and then there's an allowable amount expense. The IRS has what's something that they call IRS collection financial standards. They're basically what they refer to as their allowable expense. Even though your actual expenses may be A, they only allow B for it in this category. So like I said, in plain English, they have guidelines for what they consider allowable living expenses. Now, here's something that's important. Just because you owe over $50,000 doesn't mean an installment agreement is impossible. In fact, many taxpayers with balances of over $50,000 and even over several $100,000 qualify for payment arrangements. I do it all the time. The reality, though, is the higher the amount of debt, the more strategy matters. Sometimes regular payment plans work. Sometimes a partial payment installment agreement might be something you qualify for and is best for you. You may also find out that you qualify as currently not collectible, or even that you qualify for an offer in compromise or a settlement. Most people are going to be dealing with automated collections, calling the 800 number. Keep in mind that even though you're completing a form, they're typically going to be taking this form over the phone. They're not going to be asking you to send this form. And the person on the phone, if you're wanting something that's outside of the normal payment plan that will pay it off in full, they normally aren't going to be able to give approval. Even if it's the case of it's under $50,000, if you can't full pay the agreement, it's likely going to require managerial approval, and there may very well require from you additional information or documentation to support the numbers that are on your Form 433. What's the biggest mistake I see? Well, it's people calling the IRS without understanding how the approval process works, how the Form 433s are interpreted by the IRS, and then they find themselves either being completely surprised at the result that the IRS is giving them of what they're expecting, or worse yet, agreeing to these payment plans that they cannot realistically afford. The key is understanding how they're going to interpret the information you provide them and what you should expect before making any commitments. I'm Bob Jablonsky. I'm an enrolled agent and certified tax resolution specialist. If you would like to get together and see if I can help you resolve your tax issue, I'm going to leave you a link both in the pinned comment and in this video description below. And if this video helped you, subscribe to the channel for more practical information about solving your IRS tax problem.